What's up, everybody? It's your boy Satt coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research, so you don't have to. Shout out to 11 Labs for making every video possible with their next-gen voice cloning and text-to-speech tools. Link in the description and profile. Let's dive in. AllBirds, ticker BIRD, just became one of the wildest stock stories in the market because the company is no longer just the shoe brand people remember. Let's start with the company change. AllBirds has shifted into a new identity called Smartbird, and the market reacted fast because this is now being positioned as an AI infrastructure story. That means this is not just about sneakers, apparel, and sustainability anymore. The new headline is simple. AllBirds is trying to move from shoes to AI compute. And when a small cap stock connects itself to the AI infrastructure narrative, traders pay attention. Now let's talk about the full pivot. This is a complete business reset. The old AllBirds model was a consumer retail story built around footwear and lifestyle. The new Smartbird model is focused on AI infrastructure. That means the company wants to help enterprises access dedicated AI compute, private AI clusters, and managed infrastructure without those companies having to build and operate everything themselves. This gives the stock a much bigger story, but it also means investors have to treat it like a different company now. Infrastructure plan. Smartbird wants to deliver dedicated AI compute as a service. In plain English, an enterprise customer needs AI power, Smartbird manages the infrastructure, and the customer uses that compute for training, inference, production AI, data pipelines, and mission-critical applications. Instead of a company buying hardware, building data centers, hiring operations teams, and handling upgrades, Smartbird wants to manage procurement, deployment, maintenance, operations, and hardware refreshes. The pitch is simple. No ownership needed, managed service model, and high-performance compute built for AI demand. AllBirds also brought in a new CEO, and here's the impact. Nadia Carlsten is now leading the company, and that matters because the market does not want a random footwear executive trying to run an AI infrastructure company. Her background includes AI infrastructure, advanced computing, Amazon Web Services, Sandbox AQ, and DCAI experience. That gives this pivot more credibility. But credibility is not the same as execution. The real question is whether Smartbird can turn the new AI story into real customers, real revenue, real capacity, and real long-term value. Now let's look at the technical analysis after today's jump. Bird traded around $5.50 after jumping roughly 39% on the day. The 15-minute chart shows a strong move from the low $4 area, a major volume spike, a push toward the $6 zone, and then consolidation near $5.50. That tells me the first wave of excitement already hit. The key support zone I'm watching is around $5.20. If buyers defend that area, the chart can stay constructive. The first major resistance zone is around $6.20. If it breaks above that with volume, momentum traders could try to push it higher. But if it loses support and volume fades, this can pull back fast because news-driven spikes are volatile. Now let's talk bullish reasons and risks. On the bullish side, reason number 1 is the AI infrastructure pivot. AI compute is one of the hottest themes in the market. Reason number 2 is the expanded $100 million convertible facility, which gives Smartbird capital to support the transition. Reason number 3 is leadership credibility, because a CEO with AI infrastructure experience makes the pivot feel more serious. But now the risks. Risk number 1 is execution risk. This is a complete business reset, and those are hard to pull off. Risk number 2 is dilution risk. Convertible financing can help fund growth, but it can also pressure shareholders. Risk number 3 is volatility risk. After a huge one-day move, momentum can disappear quickly if traders stop believing the story. So here's Satt's take. I'm giving Bird a 6.5 out of 10 watch list rating. Not a buy rating, not a long-term conviction rating yet, a watch list rating. The story is exciting, the AI narrative is powerful, and the CEO change makes it more interesting. But this is still a high-risk, speculative pivot that needs proof. Traders may like the momentum, but investors need to see execution. I want to see customer announcements, infrastructure progress, revenue opportunities, and proof that Smartbird can become more than a headline. For now, Bird is a momentum play, a high-risk setup, an AI narrative stock, and a company that needs execution proof. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. If this breakdown helped you, smash that like button, subscribe, and drop a comment with the next stock you want me to cover. This is Satt with Stocks by Satt06. No face, just facts, in 5. Keep learning, keep investing, keep building. Peace.